quite critical for our infrastructure program for us to be able to borrow money both on the domestic market as well as on the international capital markets. And so it is quite important to understand what is happening in Europe, what is happening in the United States. And we think that what is happening in the world could be both an opportunity or a challenge. An opportunity in the sense that investors are now looking for credits in areas where there is no crisis, like South Africa.
Yeah.
So investors that traditionally invested in Greece, that invested in France, and that invested in Spain, in bonds there, are looking for emerging market credits where they can invest. And we're really trying to capitalize on that.
Yeah. Are you finding it more difficult to raise money in international markets now with the downgrade of the Fitch outlook? And of course, we also know that there's been talk about the other agencies potentially looking at the South Africa's credit ratings.
Look, the downgrade did not really affect Transnet per se. It was
the country one.
Yeah, and it was not a downgrade really. It was a change of outlook. Yeah, so the outlook has changed. But we're not finding it difficult to raise money because despite the change in outlook, as I say, the problems elsewhere in the Eurozone are much bigger, and also in the United States, people are looking for emerging market credits to invest in. In fact, investors are waiting for us to issue so that they can buy our bonds because emerging markets are now the theme of the day.
Absolutely. Are you beginning to see a different spread of investor interested in investing in bonds such as those that are issued by Transnet, or are we still talking about the same type of investor that would have invested in emerging markets?
We did a non-deal roadshow at the beginning of last year, and we met investors, a lot of investors who had never invested in South Africa before, both in the sovereign and in our credit, which is Transnet. And they're quite keen. They were quite keen to come in because they have now taken out money from other. One of them actually said the Eurozone is becoming it's becoming exotic.
Sure.
So that's how serious it's become.
Yeah.
And so they're looking at emerging market credits and quasi-sovereigns.
Sure.
Actually the talk of the day at the moment.
Oh. So let's talk about that infrastructure spending program. We know the pipeline came on stream, you commissioned it, and it's beginning to function. Where else now is the focus? The ports still need fixing. We also know the railways still need fixing.
The next big project is really fixing Durban Container Terminal. We have already ordered about 6 new tandem lift cranes. The tender went out last year. The cranes will be delivered during this year. But and we've also.
How much are we talking about?
That was about R1 billion.
Right.
We also have just signed an agreement to buy 6 mobile cranes that will be used in and around Durban mainly, but that will also be, because they are mobile cranes, that will be deployed anywhere where we have breakages in the container in the container terminals.
Right.
And so those will also be delivered during the course of this year. So the investment in the port of Richards Bay is also going to be quite critical. We've also issued out a tender to buy 4 new cranes for the port of Ngqura in Port Elizabeth. So really we're going to try and get our ports to operate efficiently, to get capacity into the ports, because they're quite important for our interconnectivity and for increasing the vessels on the route that is between the east and the west, really, which is our location advantage.
Yeah. Now, a constant complaint from the business sector is the fact that they are unable to move as much goods as they can onto rail from road. Let's speak about targets here in terms of Transnet and what you're trying to do in the few years going forward. When are we likely to see a situation where rail retains or increases its share of some of the freight that we're seeing moving between South African ports and the hinterland?
Over the last 10 years, the increase of containers on rail and goods on rail has been about 2% per annum. In the last year, year on year, so far, up to the end of December, we've had an 8% increase. And we hope that by the end of the financial year, we can report that the increase on goods on rail is up 9% from last year. The challenge is going to be sustaining this going forward.
Sure.
So we are making a dent already in the last year in increasing the number of containers on rail. And this is largely due to marginally increased reliability because we had fewer derailments because of our maintenance program that we're spending money on maintenance now. We had, for example, a 20-day shutdown in the coal line, which is unprecedented for maintenance purposes. And those have paid dividends because we have reduced significantly the number of derailments on our rail, which makes planning much easier because people don't get their goods after 2 or 3 weeks.
That was in fact my next question, because I was going to ask about reliability, because also that's a big bugbear of the business sector.
Yes.
In terms of reliability, what's the target and what are the timeframes?
Well, for reliability, I mean, we want to introduce modern technology in the tracking of goods so that people can see where their goods are at any one point in time. We really now started talking about internet tracking of goods on our rail system, so that when you put in a container somewhere, you can track it on the internet and see where it is at any one point in time, and we're able to feedback. You know, part of the problem about reliability is that not being able to communicate your genuine problems. We should do that better as well.
Sure.
And that should increase the confidence that people will have on us with respect to entrusting us with their goods on rail.
Yeah. So in terms of your main targets for 2012, Brian, let's just spell them out. I want it on record, and we're going to play this at the end of the year for you.
Targets for 2012, we
Sure.
will see a continued increase in goods on rail.
What's your target market share there?
I think that we will increase year on year by another 9% or 10%. We did increase by about 9-10% for 2011-12. I think that we should be able to increase by another 9 or 10% in the following year and sustain it for another 2 or 3 years. And that should increase our market share from where it is now at about 15% to about maybe close to 30%.